Hey, what's going on, everybody? Happy Monday. It's September 5th, and today is a holiday here in the US because it is Labor Day. So the US markets are closed, and as you can see, BTC, most cryptos have not really done anything since the Friday close of the US markets. I think the Friday close was somewhere around here, right? We saw this big sell-off, and since then, we've pretty much been grinding down in a choppy sideways range, getting capped by $20,000, which happens to be the September monthly open. Let me see if I can map this out for you guys real quick. So that's kind of where the September monthly open is. You guys know very well, when you start looking at markets, the weekly opens, the monthly opens, quarterly opens, yearly opens, these are very key levels for the market to find support or resistance in and around. And once the market sort of decides that a certain level is capping price, until that level is smashed through with high volume, it's better to just assume that that level is going to keep continuing to cap price, whether it's from the downside or from the upside. Now, currently, we stay capped between, for now, 20,000 resistance and about $19,500 of support, which is the weekly open. So between this little range right here, we have yet to decide which way price wants to move. But today's video is more about the larger metrics that we want to be paying attention to for the coming 1 to 2 weeks ahead, because the next few weeks ahead are probably going to be bigger than what's happening in this little choppy range. And I'll tell you guys why exactly. First, make sure you hit the thumbs up if you do like our content. It helps support the channel. It helps kind of keep the lights on. It helps me pay for my writers. So make sure you all hit the thumbs up. And if you are interested in joining the Advantage community, again, the Advantage community is a private Discord that we have where I post private videos, private trades, private analysis, private information from different resources such as Bloomberg and other services I pay for. I sort of surmise those resources into a nice snippet for my Advantage members. Okay, so effectively for the price of $97, you get to hear all the things that, all the services that you may not want to pay for, such as Bloomberg or Delphi Digital or Real Vision or Wall Street Journal, Forbes. All these things I basically summarize for you guys from their articles or my analysis into this private Discord. Okay. I don't reveal anything such as private information that they may not want to have revealed, but I just summarize it in a way where I don't give away too much, and I let you guys get a ton of the alpha from those private subscriptions. Okay. Aside from that, for $97 per month, right? What I do is I make 2 videos a day. Okay. So the video that you're seeing right now, I have a similar video like this for private members around the evening time, almost every day, Monday to Friday. Sometimes we do weekend analysis, but more often than not, weekends are pretty quiet. So Monday to Friday, you could definitely expect 2 videos a day. And then, of course, like I said, you can expect these channels to get populated with a ton of analysis. For example, yesterday I was talking about Atom. How and why Atom is one of the strongest looking pairs, whether it's from the Atom USD pair perspective, the BTC pair perspective, or even the ETH pair perspective, right? This is one of those, I wouldn't say it's a hidden secret, but it's one of those things that if you look at Atom carefully, Atom is one of those assets over the last 1 year. It has led the market up and down. And unless you actually do the due diligence and research, you wouldn't know that. And so this is the kind of information that I produce for my Advantage members. And I just let them know, exactly what the opportunities are, whether it's from a trading perspective, if you want to buy spot, and also what's happening in the Atom ecosystem. We often talk about things aside from trading or longing or shorting things. We talk about exactly what's going on in the ecosystem, whether it's Osmosis, which is one of the Atom protocols, or Juno network, or all these different things happening in the Atom ecosystem. And same goes for other assets, right? For example, Ethereum, clearly has a strong narrative behind it, a strong bid under it. And I mentioned this merge thread that Eric Wall wrote. I thought this was one of the most brilliant threads of, just looking at exactly what is going to happen with the ETH merge, why it matters, why it doesn't, what it could do to price, what it won't do to price. So these are the things, like I said, I like to read up on a ton of crypto related stuff, market updates, market analysis, and then I present this in a more distilled manner to my Advantage members. So what you're effectively paying for is, instead of you doing the research for hours and days on end, you're paying for the ability for my view, my lens on the market to be summarized to you in less than 5 minutes of whatever you want to see. Okay, so today's video is going to be just about that, right? My view and my lens of the market and what I see happening in the next few weeks ahead. It's very hard to tell what's going to happen in the next 1 month or 3 months ahead, given how crazy the macro environment is. So we're only going to talk 2 weeks out. Okay. In the last video, I discussed, trading psychology and how to not be your worst enemy in markets, especially in bear markets. And if you want to watch that video, if you feel like you're struggling in the bear market, definitely check out this video. I lay out my struggles. Again, I'm not one to hide exactly how good or how bad I do in the markets. This is the transparency that you get for being part of the community. So again, you can go to thealphatrades.com and check out this video right here that's highlighted. And you'll see exactly, the things I'm dealing with, the things I'm struggling with, the things I'm doing well in this particular video. So let's get started on today's analysis. So what I see happening right now is, in the short time frame, this area is very messy. It's very noisy, and it's hard to understand exactly what's going on. So for that, what we need to do is we need to dial out to the daily chart, right? Because the daily gives us a better picture. What the daily tells me right now is the chart is a complete mess, from a daily perspective, in the fact that, we've been trending down basically since November, late last year. And the trending down part has not really stopped, especially in Bitcoin. Other aspects of the crypto markets may be doing slightly better, but BTC is not. This rising wedge that we broke down from here on August has clearly been one of the stronger points that has sold us off. And this candle right here that you see, this happened about 2.5 weeks ago, which was the Jackson Hole event, where price, pretty much got aggressively sold off due to just aggressively bearish posturing. Or actually, I don't know if it was this one or this one. Both these candles, I think, had unique events that sold off price. So this candle right here was something bearish related to the US equity markets plus crypto markets. And this one, I think, was a Jackson Hole event where almost all markets de-risked, right? It wasn't just Bitcoin. It was also US equities and Ethereum. Commodities markets start to de-risk. But the point is that in the near term, okay, if you're a moving average person, what the moving averages are telling you right now is the 20 and the 40 EMA averages are already starting to slope down and starting to trend down. More often than not, if you actually look back and do a backward testing on this, whenever you get this 20 and 40 bearish flip, where the 40 is above 20, right, you can definitely expect continued downside. Okay, and that continued downside is going to basically be part of the trend until we hit sort of a brick wall or some sort of capitulation style movement like this happened in the middle of June. Okay, and then price starts to bang into the 20, it starts to bang into the 40, and either price cannot reclaim above either of those or both of those, and then it gets rejected some more like it did back here, right? So this one had a sell-off. We get stretched too far away from the 20 and the 40, and then we bang right into the 20 and close to the 40, and then we sell off some more. Okay, so this time around, we're expecting similar results, which is that things are not looking good. Higher probability chances are that we may see, possibly more downside from here. And it doesn't mean that it has to happen instantaneously where we drop like this, but it could mean that, the more chop and more up and down movement that you have, you may get some opportunities in this little block right here to start getting short on the market. And this is specifically related to BTC, because other aspects of the market are either moving with more strength or less weakness. One of those assets is Ethereum. Clearly, Ethereum has looked better structurally than Bitcoin over the last, 2 or 3 months. But in the near term, guess what? In the near term, we also now see that Ethereum has had its own bearish cross right here on the 20 and 40 EMAs on the daily basis, right? So all things are really not looking good for both Bitcoin and Ethereum. And again, back testing this all the way back to November 2021, you can expect, pretty severe downside whenever the 20 and the 40 EMA cross bearishly like this, right? Whether it's back here in May 2021, or whether it's back here in December, November 2021, right? You expect continued downside, okay? So just keep an eye on things like that. There's other different ways to look at the market. And one way I like to look at the market is total market cap, right? Total market cap is effectively, everything, whether it's Bitcoin, ETH, Cardano, Solana, etc., everything all put together. And that total market cap for the entire crypto market is around $952 billion right now. So just a shy under 1 trillion. If you remember, earlier this year, late last year, we capped, the entire market cap pretty close to 3 trillion. And that was pretty awesome to see that. But of course, that seems like an eternity ago. And now we're down about 60% off that, high watermark of the market cap. The RSI is also telling you that the way the market cap is continuously trending down, it doesn't really look like it has escaped this sort of descending, resistance point in the momentum. Meaning that if it starts trending down from here, expect this market cap to head towards this previous resistance around January 2018. So from a market cap perspective, that's another 25 to 30% drop. If you see BTC as a chart, right, you can kind of see that Bitcoin actually hit. So BTC actually hit the 2018 previous high. So if we go to the weekly right there, right, that's the previous high on BTC right there, okay, from 2017 and 18. Here, we're basically sitting on that. But guess what? The total market cap, this one right here, is pretty far away from retesting this, previous high in 2017 and 18. So I actually am of the opinion that I believe we're going to get this retest down here around $685 to $700 billion, which would probably mean that there's going to be a wider flush to altcoins. But I actually don't think that we'll see a big flush to BTC. So for example, I think it's possible that maybe Bitcoin drops, say 30%, right? So let's just say Bitcoin drops, I don't know, 20, let's just say 20%, right? If Bitcoin drops 20%, okay, and Bitcoin being the biggest market cap of, the crypto market, I believe Ethereum could drop 35 to 40%. And I believe that, so if Ethereum drops, say 35 to 40%, right, from here, where is that? It can basically go back to the previous low put in June, right? Let's just say a 45% drop. And if altcoins also drop, 35, 40%, where could Solana go? Okay, Solana could go probably somewhere, around $20 or so. Okay, where could something like Atom go? And again, Atom has been one of the strongest trending assets, stronger than Bitcoin and definitely stronger than Ethereum, stronger than pretty much most, larger market cap assets. If Atom breaks down, 35, 40%, Atom is going to go back to $7.50, maybe $8 or something. Okay. The reason I'm pointing this out to you guys is because if you just simply pay attention to the total market cap and you see that, okay, well, Bitcoin has sold off quite a bit. It has retested its previous all-time high in 2017 and 18, but altcoins still look relatively strong, right? Or not relatively strong, but they look like, they could fall a lot if there's another leg down. Then you can assume that Bitcoin is going to drop at a lesser percentage than other altcoins, right? Here's a simple way to look at that. So if we actually look at, say, a comparative analysis of how alts have done, Okay, so let's do this. So let me do this actually. Shoot, what did I just do? Okay, there we go. So let's do from, this is the high from like 2021, late 2021. You can kind of see that BTC has dropped 66%, while most altcoins have dropped more than 66%, from the high last November, right? But you can see Matic and Near Protocol, Atom, Ethereum are down lesser percentage-wise than BTC. Now, again, historical sort of precedent says that more often than not in a bear cycle, altcoins are going to drop at a higher percentage than BTC when it's all said and done. Okay, so that means that if BTC goes down, say another 10, 20%, I am probably expecting altcoins to go down by 30 to 50%. Okay, that like at minimum, that would probably be my expectation. And that could mean that, say something like Atom could do something like this, where it could be a big, big W bottom by the end of, this year, and Atom maybe comes back to $6 or $7 back here. And in my opinion, this would be a fantastic buying opportunity. Now, I like Atom as an ecosystem. I've only used it a few times. I think, the ecosystem I'm most familiar with is Solana. But either way, Atom or Solana, in my opinion, are going to be my top tier assets that I want to be paying attention to if we do have that leg down. Especially Atom, because Atom has clearly outperformed and done better than most alts. Look at the structure on Atom, and then look at Solana, then look at Rune, Matic. Matic looks decent. AVAX looks like shit, right? Ethereum looks good, but FTM looks like crap. Near Protocol kind of also looks like crap. Ren Protocol also looks like crap. So again, Atom, when it's showing you good strength to the upside, that means that there's probably a stronger bid in Atom than most other assets, right? So you want to be paying attention to something like that, okay? All right, so we talked about total market cap as a chart and as a visual metric to pay attention to. What about other aspects of the market? Well, I think another asset that you want to be watching is DeFi perp. Okay, why is DeFi perp an important asset that you want to be watching? Because this is basically an index to pay attention to how the DeFi protocols that came out in 2020, 2021, how are they doing, as an aggregate, right? Well, as an aggregate, they're kind of doing like shit, from its highs, or their highs were back here in May 2021, they're down about 83%. And it has its own respective, descending parallel channel, right? So in this particular parallel channel, if we start another breakdown leg from here, I would expect these alts to get back to somewhere down here around 1,500. Okay. So from here, that's another, 37 to 40% drop. This coincides with what I was just talking about earlier, is if Bitcoin drops by 20%, I would expect altcoins to drop by 40, maybe as high as 50%. So watching DeFi perp is going to be one of the more, important charts, like visually, because DeFi perp gives you a one chart visual view of all things DeFi related. And DeFi was the key narrative, the key thesis in most of 2020 and most of 2021. So when you start seeing that get fully unwound, that means that a lot of the excess speculation, the gains, the leverage, all is coming out of the market. And I believe that the bottom could be sealed somewhere between, the 40% drop. Obviously, it could drop lower, but I'm just saying you probably want to pay attention to, at minimum, a 40% drop from current prices, which is around like 1,650 to 1,700 points in this yellow zone. Okay. Near term, right, here are certain things that I'm looking at right now. In the choppy little rangy area that we're in, okay, so this particular area right here, it all looks like crap, right? It's all a lot of noise. And what I see here, and again, you can check this out on Levitas. They have a pretty amazing platform and a dashboard to look at all little metrics that you want to be watching for positioning in the market, options information, volatility, anything DeFi related, global charts or global, data and metrics that you want to be watching. So make sure y'all check out this platform, okay? So what I see happening right now is the market is very quiet. The market not only is quiet, but it's very protective on both sides. The shorts believe that the market is going to keep dropping and we're going to get a nuke, next week or, this month. The longs believe that the market is very oversold and we're going to squeeze to the upside and blow shorts out of the water, right? And so the positioning, depending on which exchange you go to, reflects just that. It is the hedged style positioning that you see in options data, that you see in the perpetual swaps that we're looking at, whether it's Binance or Bitfinex. You'll see that the positioning is relatively equal if you put all the exchanges together, right? There's a lot of shorts going in on one side in one asset, and then there's a lot of longs going in on one side or the other, right? So all in all, to me, it evens out, okay? I think the most important thing that we want to be watching is just the overall trend of the market. The trend of the market is abundantly clear. It's a pretty strong downtrend. So hoping and wishing for a new uptrend is well out of the question for now, right? Unless we have some massive short squeeze or some massive event in the stock market side that's going to turn the market around completely, which I don't believe is true anytime soon. Unless we have that style event, just assume that the market is going to keep going down. And so the assumption of something like that means that more often than not, your positioning on the short side will pay off better, whether in the next few hours and in the next few days, right? But again, it doesn't mean that you won't get squeezed out up before down, meaning that if you start shorting now and the market goes up to 20,500 or 20,700, it's only $1,000 move. But if you're high levered, that $1,000 move is going to blow your face off, right? So make sure your leverage, make sure your sizing and everything is proper, okay? Because these are not conditions that you necessarily want to start shorting with heavy shorts, but they're pretty decent conditions to start shorting or, having a short bias rather. And again, that's not investment advice to start shorting. It just means that the market is probably going to be more conducive, more favoring towards the short side, given the incredible, weakness that the market as a whole, as an aggregate, has had. Okay. A couple of other metrics that I want to be watching. So let's see here. I want to show y'all global activity. You guys know this very well, right? Just the overall activity of the market has slowed down to almost a grinding halt. Actually, let's go to year to date. I just want to see year to date how things are looking from the global market volume perspective. You can kind of see that, over the last maybe 8 or 9 months, you kind of have random spikes here and there, but the liquidity has been drained out of the market, right? The interest in actually chasing a narrative or chasing a reason for getting long in the market or for the market to push in a good amount of volume, the reasons are very slim or they're non-existent. One of the very few reasons that we have in the market right now is just Ethereum merge. Like that's really it. And one can make the argument that, once the merge started to be part of a conversation from back here around June or July, well, from here, the market was already up like 90%, right? Like that's a pretty substantial move already. So one could say that, well, it's maybe safe to assume that the merge is effectively already priced in. Now, again, I don't quite know. I personally think that it's possible that the market as a whole is already capped. It's so damn weak that we're not going to go that much further. Okay, that's my personal opinion. Now, you can read Eric Wall's thread right here. And again, this is on my Twitter feed. You could follow me at _Alpha Trades. But Eric Wall here has written a pretty nice thread about just, the merge, what's happening, is it priced in or not? Okay. And the one thing the market here is kind of telling you is that, well, once we hit 2000, you kind of just saw, pretty sharp selling come into place. And we've been bouncing off, maybe 1450, which is also this previous SR level back here in February and March 2021, right? So the fact that we're sitting above this level but below 2000 means that this might be range bound for now. Okay, so the range might be like this, and like this before we either break down from here or break up from here. So the range trade could be, okay, well, you get long, stop here, close right around 1950, 2000. You can wait for the price to come up here, get short here, stop, somewhere up here and take this trade back down to 1450 and cover your shorts. Or if you believe that the market is going to break down further, well, once it does something like this, retest like that, then you add to your short right there, and you take this trade back down to $750 or $1,000 right here on ETH. Right, so there's multiple ways to go about trading this current environment. Okay, but as I mentioned, from a market volume perspective, like as an aggregate of the crypto markets, right, things are looking very dismal. When volume starts dying out, when liquidity starts getting pulled out of the market, a few things can happen, right? Number one, people can get more and more positioned on one side or the other, and we don't quite know, which side is, betting on which direction. So meaning, are people climbing and piling into this open interest by getting long in the market, or is a lot of this open interest, heavy shorts, right? But this is a lot of open interest that has effectively been building. If you see right here, right? End of July down here, open interest was about 14 billion. Now it's close to 20 billion. So that's, a good 25, 30% rise in open interest. Okay. That could mean that majority of this is Ethereum open interest, or, it could be Ethereum and some other altcoins with some BTC. But the point is that open interest has climbed a decent amount. And personally, I actually think that this is a lot of long open interest. And long open interest means that if people are getting positioned to the long side and the market starts breaking down, what's going to start happening to the open interest? It's going to start dropping, right? Because those longs are going to start getting closed out, and the open interest is going to start taking a nosedive. Okay, kind of like how it did back here, right? Between May and pretty much was it like June right here, right? That open interest took a sharp nosedive, grinded up, and then broke down again. Okay, so just something to keep in mind that, in my opinion, I think the longs are getting a bit too excited with all this open interest. And if the market starts going against them, meaning if BTC starts going down 20%, like we said, and altcoins start going down 40 or 50%, the market is going to take all the longs to the woodshed and just shoot them, because it's going to be an almost epic, brutal sell-off. Because not only will the longs get cleaned out of the market, this final leg, again, if it happens, the final leg will seem almost, it'll seem almost like to the point of this kind of panic, but even worse, because people will have thought, oh, well, this was like the worst of the situation because Three Arrows Capital blew up. Celsius looked like it was going to go bankrupt. Do Kwon and all those people, they sold back here. How much worse could it get? Well, imagine if the market says, hold my beer and watch me, show you how much worse it could get. Well, this is going to be the true panic of almost everybody in crypto, right? Because we already know that the macro stage of things is already deteriorating, whether it's high inflation, high energy prices, civil unrest, war-related stuff, all kinds of noise that's happening in the macro environment. This really might panic people to the point where they have no option but to sell their BTC, sell their cryptos at whatever loss that they need to take, because they might be severely concerned about their future, paying their bills or paying electricity bills or paying for gas or paying for food, right? So that's just something y'all want to keep in mind, that the panic could, get significantly worse. I know there's a lot of people out there that say that, well, a lot of the panic has already taken place and, this was the bottom. It might be. Honestly, I'm not smart enough to know, right? All I know is that the market is not showing me any signs of a bottom. In fact, the sign here was that if this was the true panic down here where everything broke, well, then we should have had a pretty sharp rebound, right? And, you know, some of the other factors that we pay attention to, such as the 200 weekly moving averages, okay? These are the weekly moving averages that date back to 2015. We've never spent so much time under the 200 weekly MA, this yellow line right here, right? If you look back, going back to 2015, we've never spent that much time ever below that moving average. And guess what? Now we've spent pretty much, you know, almost 8 out of the 12 candles inside the 200 weekly MA, this yellow line right here. I don't know what that means, but it doesn't seem like it means, you know, anything particularly good. Okay. So I just wanted to let y'all know that, you know, be careful in the current market conditions because, yeah, they're not looking too great. Okay. All right. Again, I know today's video is a little bit longer than usual. Please do make sure you hit the thumbs up. I like taking my time to make these videos, especially on a holiday, because there's not that much noise happening in the market, right? News flow is calm. The markets are not moving. You know, U.S. equity markets, they're not really open. Only thing that's open is for us to look at crypto, look at all things surrounding crypto, and plan for the coming weeks ahead. Okay. So other things that I want to mention, okay, as I stated that, you know, when volume starts coming down and you start seeing positioning being built, okay, so open interest being built, there's a third factor that goes into this equation, okay? So I want you guys to take a second to think about it because it is one of the most important factors regarding crypto, and that is volatility, okay? When you start seeing volume get, you know, churned out, liquidity dry up, yet you still see open interest building. What does that mean? That means that there's probably, you know, some sort of high volatile event that's on its way. And I'll show you guys exactly how we can look at that. So again, on the Levitas platform, what you can do is you can go to the volatility metric right here, go to implied vol, and then I like to go to, say, the, I don't know, let's go to all, right? Let's go through a few years of data, okay? So the few years of data will tell you that, okay, this is BTC in green, this is ETH in red, this is Solana in blue. We're going to turn off Solana. We're going to look at BTC and ETH. Why? Because these are the largest market cap assets, and they still have a pretty high, you know, implied volatility, okay? If you look back historically, whenever both these or either of these assets gets pretty close to, you know, 40 or 50 vol, right, somewhere down here, you should probably expect in the next few weeks that the market is not going to stay quiet like this for long, okay? Because neither of these assets are, you know, quiet assets, meaning they don't just chop around sideways for weeks and weeks and weeks. They might, but sooner or later, you know, within the next few weeks or a month, it's going to have a big move, right? Whether to the upside or the downside. And again, it could go either way. Volatility, you know, doesn't really have a bias in direction. Volatility just means up or down, but in a big, massive way. So the point is that if you look at volatility being, you know, clamped down between, you know, 40 or 50 vol, you can expect volatility to get to 150 to almost 200 in the next few weeks, right? You can see right here, volatility calms down. Again, middle of April, boom, big event comes, takes vol about 228 on ETH and about 159 on BTC on a 7-day implied volatility basis, okay? Again, same thing back here, right? In May or June earlier this year, volatility came down, you know, pretty sharply around, I think, like 50 or 70 with BTC and ETH. And then again, big event takes volatility much, much higher. Once again, we're seeing volatility come down here in September. BTC somewhere around 63, ETH is 96, so higher than average. But I think over the next few weeks, I would expect this volatility to come down and then have maybe another spike like this. Okay, it may take a little while, but I could kind of see that kind of expectation of a big spike to the upside in volatility. Okay. We know that CPI data, inflation, this has been one of the biggest, things on our agenda, right? Like whenever we have CPI data, it seems like the entire crypto space is looking at the market from a different lens, from the macro lens, trading the chart on a minute or 5-minute basis, depending on what the Fed says or what kind of data print comes out. And I don't blame them, right? I mean, that is the reality of the market that we're in. Well, we do have a September 13th CPI release coming out 8:30 a.m. Eastern time. Okay, so that's basically, I think, next Tuesday. Yeah, next Tuesday. So next Tuesday, you want to keep that in mind that that's a pretty big event coming up. And depending on how the market is positioned, you might start seeing, big volatile moves to the upside or the downside, or both, honestly. So just keep that in mind. All right. Last but not least, what I wanted to share with you guys is this article, from Nasdaq.com. Where will the bear market bottom? History offers a very clear clue. I will put this in the notes below in YouTube, but make sure you check this out, especially this little section right here. Valuation plays a key role during bear markets. I'll let you guys read this, but one thing that this little section told me is that the markets overall over the past, few years, especially in 2020, 2021, had significant outperformance on a year-to-year basis. What do I mean by that? Well, historically, if you go back on the S&P 500, right? So if you go back on the S&P 500 and you go to, say, a yearly chart, okay? On a yearly basis, you can expect the market to give you about, 10 to 20 year average returns, 10 to 20% average returns. But on a larger time frame, so looking back on the 100 years, you should probably expect that average to constrict down to about 8 to 12%. That is the true average. So if few years you get, so for example, 1, 2, 3, 4, these are big years in the 90s, right? 95, 96, 97, 98, 99. Okay, these were 30% and 20% and 31% and 26%. And then this one was 19%. Okay. After that, you have 3 years of a bear market. Okay. Because you have such massive years, you have then a 10% down year, another 13% down year, another 23% down year. These 3 down years bring down the average of these 4 or 5 up years. Okay, that is exactly what I mean by 8 to 12% on a year-over-year basis. Okay, if you look right here in this candle right here, this candle was 2020. We put in a 16% return in 2020. In 2021, this green candle right here, we put in a 26% return. Okay, that means that in this year, the 17% return that we're on right now, negative 17% rather, we could maybe expect another year of downside or maybe a flat year. And that will bring down the average of these 2 big years, or rather these 3 big years. Okay, these 3 big years of upside, because this was 28% in 2019, 16% in 2020, and 26% in 2021. So the averages may come down like this. I'm not saying we have to have 3 years of bear market, but it could mean that this year itself could get really, really shitty. And maybe even the first half of next year could get really, really shitty. Okay, so just I wanted to prepare y'all for stuff like that. And so when you look at that, right, from a valuation perspective, what this article basically says is a lot of stocks are still overvalued and they could come down significantly in terms of valuation. Okay, I'll let y'all read more into it, but I just want to point that out that this is, in my opinion, similar to what's happening in the crypto space, is that there is a lot of froth, a lot of garbage that people are talking about, buying dog coins and cat coins, some stupid JPEG or NFTs that they pay 10K, 100K, $1 million. You'll be really surprised at how bad the market could put people in a capital crunch and weed out all the interest, all the euphoria, all the money over a 6-month, 12-month, 18-month time horizon. It can clean all that out because the market humbles all. The market could humble entire industries and entire asset classes. And I believe that crypto is going through the similar style of humbling like it did back here in 2018, when we knew that there was just a lot of froth and a lot of garbage back here. But guess what? Out of 2019 and 20, we saw the rise of DeFi. We saw the rise of NFTs. So I believe that when we get this flush or the sideways price action over the next few months, I think it's entirely possible that we get a new emerging industry, a new emerging, sector within crypto. That could mean whether it's gaming or L2 tokens or layer 0 or bridges or whatever, but it could be something amazing. And that is something that we want to be looking forward to, because the crypto space, you guys know very well, is one of the most unique, innovative, fast-moving spaces, and one with the most growth that will ever exist in our lifetimes, in my opinion. Okay. So as we pay attention to, what's happening in the crypto space, right, just keep in mind that, the market, though it may feel like death, there's going to be always opportunities. Okay. If you just sit around and wait long enough for the market to clear up all this garbage, and you pay attention to good assets and you do your research, trust me, the future will always be bright for crypto, because it is one of the most unique asset classes that is truly revolutionizing the world. And if you don't believe that, then the question is, what the heck are we doing here anyway, right? So anyway, I hope y'all enjoy this analysis. Please make sure you check out my videos. Make sure y'all hit the thumbs up on this video. I would really appreciate it. We have the products page right here. Like I said, $97 per month gives you access to me almost 24/7, 10 videos per week in terms of analysis. Anything that you want me to look at, I will look at for you. Live trading updates. We have a 5K challenge account that I do every year. We have Bitcoin analysis, altcoin analysis, and NFT area, discussion of macro as well as stocks right here. Tons of information that you would have a lot of fun and discussing and making friends in our community. Okay. And like I said before, I've been trading mostly on Bitget nowadays because I personally like their platform. I like how easy it is to use. I like their CoinM futures. I like their USDT and USDC futures. And they also have these demo trading accounts where if you don't know how to trade these with real money, you can test them out with simulation money. Okay. They also have this really cool section with copy trading. So if you find a trader like myself or other traders, you can just one-click copy, and then your account will effectively mimic other people's trades, right? You can see how other people are trading, and if they're trading Bitcoin longs, your account will automatically go long without you having to do anything. You can set the parameters of how much you're willing to tolerate for a loss, how much size, how much, where your stop needs to be, etc. All that is done in copy trading section right here. I'll let y'all explore that, okay? So like I said, make sure y'all check out Bitget. There's a ton of opportunities for awards, and they reward you, for generating volume or participating on their exchange, okay? So check out Bitget. The link is in the top right of my video, as well as the bottom YouTube description in the video, all right? And you have a chance to win, I think, $4,163 just for newcomers. It's not that easy to get all the $4,100, but you can get a pretty decent chunk if you actually follow the Get Your Rewards link. All right, that's all I got, everybody. Hope you all like the analysis. I like to put in the work for the analysis. I hope you like watching it. Good luck. Take care. Kick ass in the week ahead. And yeah, hit the thumbs up. Leave me a comment of your thoughts. All right. Cheers, everybody.